Hey everybody, I want to share something with you that really disturbs me because it's factual. It's statistics, and it's going to impact every single one of us at some point in our lives. Many of us are getting near that retirement age when we're thinking about, what have I done with my money over the past 30, 40 years. But even if you're not, even if you're just at the beginning and you're one of those that are just starting out, there is so much wisdom packed into what I'm going to share with you right now. I want to share with you what I call the Great American Consumer Dilemma, which basically, again, this is statistics right now in our country. Out of every 100 people at age 65, 54% will be broke, completely financially broke. 36% will have passed away. 5 will still be working. Only 4% will be financially secure, and the top 1% will retire very wealthy. So let me ask you a question. Where is your current financial track leading you? Where are you going to end up if you stay on the current financial track that you're on? Listen, I know from experience, personal experience, that money issues divide families. And there are so many people out there that are struggling financially. In fact, statistically speaking, Americans are now buried under more of a mountain of debt than we've ever been buried under before, previously in the history of our country. So, why is it so hard to get ahead financially? Well, simply speaking, and we're all guilty of this, at some point in our lives, we borrow to fill the gap. If we're not bringing in enough income, we borrow to fill the gap. So more of our income goes to repaying debts. We keep borrowing to maintain our lifestyle, and the end result is that all of a sudden, without knowing it, bit by bit, piece by piece, week after week, month after month, all of a sudden, a lot of our income goes towards repaying debt, and we have nothing left. Now, here's what makes it even worse. A lot of that money goes to areas that I consider unseen by most Americans. Let me tell you what I mean. If I were to ask you, where does most of your money go? Or in other words, what is your biggest monthly expense? Most people are going to tell me it's their mortgage or their rent. I'm going to invite you to look deeper, because the reality for most people is that most of their money, their biggest monthly expense, is actually going to interest. Mortgage interest, car loan interest, credit card interest, personal loan interest, student loan interest. When you add up all of the money that you pay every single month that goes to pure interest on your debts, it's going to be an eye-opener. Let me just share with you that you're never ever going to become wealthy or even financially healthy until you do what wealthy people, smart money managers, do. So what's the number one thing that most wealthy people, smart money managers, do? They earn interest. They do not pay interest. There's a huge difference between those two, earning interest or paying interest. Albert Einstein called compound interest the eighth wonder of the world, and that's the actual equation on screen to compound interest if you're interested. He also said doing the same thing over and over again and expecting different results is the very definition of insanity. But one of the most important things he probably ever said was those who understand interest are destined to earn it, while those who don't are doomed to pay it. Is your money working for you, or are you working for somebody else's benefit, somebody else's gain? Here's some interesting facts that I want to share with you really quickly. Most Americans will earn between $1.2 to $4.4 million during their working years. From ages 20 to 65, most Americans are going to earn at least $1.2 million, and many are going to fall between there, up to $4.4 million during their working years. So let me ask you, where are you currently at financially? Are you debt-free? How much of that money that you've already earned over the course of your working years so far have you been able to set aside for retirement? Now, here's another interesting fact. The average American has at least 2 credit cards. That's at least 2. The average debt per credit card is $8,220 at 12.73% interest with a monthly payment of $329. Well, paying the minimum monthly payments each month on that balance of $8,220 is going to take approximately 11 years to pay off that credit card debt, and the interest alone is going to be $2,895, which means that you'd be paying back on that $8,220 that you've borrowed, you're going to be paying back a total of $11,115. You can see a lot of it is interest, but that's not the worst part. And this is what most Americans never stop to think about, and this is why we keep ourselves in that perpetual place of debt. Because if we had invested, if we were able to invest the $329 per month for 11 years and receive just 2% interest on our money, over that 11-year period of time, we would have accumulated $48,970. So here's what most people don't see. The $8,220 of credit card debt didn't just cost us $11,115. It robbed us of this earning potential because our money wasn't working for us. So in other words, the combined loss between what we paid and what we did not earn, those are both losses, was $60,000. How are you feeling about your credit card debt about now? Now, again, if you've got 2 credit card debts, that's times 2, so that's $120,000. Are you starting to be able to see a little bit of why you're not getting ahead financially and why you're probably struggling financially? Here's some more interesting facts. In 1929, only 2% of the homes in America had a mortgage against them. 98% were mortgage-free. But in 1962, that had all turned around. In that short period of time between 1929 and 1962, we went from having 98% of our homes paid for, free and clear, to where, as a country, as Americans, we were 98% in debt. 98% of our homes had a mortgage against them, and only 2% were mortgage-free. Friends, we've gone the wrong direction financially as a country, and that's why so many of us are struggling financially right now. I want to show you a mortgage, and I really want you to understand how these work, because I hear this all the time when I talk to people, and I say, how much interest are you paying on your mortgage? And they're excited, they're happy, because they say, hey, I'm only paying 4% interest, or maybe 4.5% interest. In their minds, in the minds of most Americans, that's a reality, that's a truth. But here's the shocking fact. It is not 4% interest. It is not 4.5% interest, or whatever it is. I want to show you some real hard math, and I want you to understand what I'm saying. Let's say that you've got a $300,000 mortgage, and it's 4.5% annual percentage rate, which makes your monthly payment about $1,520. So month number 1, you send in that $1,520. The bank takes $1,125 of it as pure interest and only applies $395 to the principal amount of your mortgage. Now, you paid $1,520. Does that look like 4.5% interest to you, that $1,125? Get out a calculator and figure out how much interest that is. I promise you it's not 4.5%, it's a lot more. Month number 2. They only apply $396 towards principal. Still, $1,123.52 is pure interest. After 1 full year on this particular mortgage, you're still paying a high, exorbitant amount of every single payment that you make towards interest. Again, does this look like 4% to you, or 4.5%? If you've paid out of your pocket over the first year of that mortgage $18,240, and only 4,800 of that has been applied to equity. The rest is all pure interest. Are you going to tell me that that's 4.5%? Listen, this is how mortgages work, and you need to understand this. There are 2 times in the life of a mortgage that it is a true 4% or 4.5% interest rate. 2 times. One is if you paid that mortgage off in full at the end of the very first year, if you paid it off in full in month number 12 and didn't owe anything more, then and only then would it be considered a 4.5% interest. And that's why they can legally tell you that it's a 4.5% interest, because what people don't hear and don't understand and don't look at is annual percentage rate. In other words, you're going to pay 4.5% every year, and they're going to front load that mortgage with massive amounts of interest. Why are they going to front load it? Because they know that you're going to refinance. Typically, Americans refinance every 5 years. Or they sell their homes and move and take on a new mortgage every 5 years. The system is rigged to where you're going to pay horrible amounts of money every month, every year to pure interest. Here's this same mortgage after 5 years. You've paid out of your pocket $91,203. Only $26,000 has gone to equity. Out of $91,000, only $26,000 is equity. The rest is pure interest. 10 years. You've paid out of your pocket, if you didn't refinance, if you kept the same mortgage, you've paid out of your pocket $182,000 total. Only $59,000 went to equity. The rest is pure interest. Now let me ask you this, and you need to understand this. What did that interest buy you? What did the interest pay for? What did you gain by spending all of your hard-earned money, a big portion of your hard-earned money, on interest? Well, you didn't gain anything, truthfully. Here's year 20. I want you to really look at this. 20 years into this mortgage, we're still sending in our monthly payment of $1,520 a month. Look how much is still going to interest every month. That's still not 4.5% interest. 20 years into it, we still are paying far more than 4.5% interest. The reality is most mortgages, when you really calculate them and look at them closely, most mortgages you're paying somewhere in the neighborhood of 75 to 80% or more in interest. Think about that. And then we finally pay it off in year 30 if all goes well. Well, listen, here's what I want you to see. That $300,000 mortgage, that $300,000 home, it wasn't a $300,000 home. It was a $547,000 home, because that's what you paid if you keep it and pay every month on that mortgage for 30 years. You've paid $547,000 for the $300,000 home. It's almost double what you thought you were paying for your home. Now, I want to look at it another way. Because remember, all of that time that you were paying on the mortgage, your money was not working for you. It was working for somebody else. It was working for the lender. It was working for the bank. If you had invested the same amount as your monthly payment, I'll back it up a slide. Remember, the monthly payment is $1,520. So if you had invested $1,520 per month and only gotten a 2% return on your money over that 30-year period of time, at the end of 30 years, you would have $750,000 in the bank for retirement. So who's your money working for? Is it working for you? Or is it working for the lender? The answer is pretty clear, because the real cost of that home was not just the $547,220 that you put out in both principal and interest, but the lost income opportunity over a 30-year period of time cost you $700,000, $750,000 that you did not earn on your money. The total cost of that home, friends, is 1.2, almost 1.3 million dollars. This is why Americans are struggling so hard when it comes to retirement, and 95% of them are broke or dead or still working at retirement because you have given most of your money over that 30-year period of time to the bank in the form of interest. On this particular example, that's a whopping $997,000 in interest cost and lost opportunity cost. That's huge, huge. Paying interest steals your future. Do you have to stay on that current path that you're on? No, absolutely not. Because paying interest is literally money down the drain. If you stop and think about it, and I did this one time, I sat down and calculated my wife and I's bills, and then I figured out how much of our money every single month was going to pure interest. The number scared me to death because I realized I was literally at that particular time taking somewhere in the neighborhood of $100 a day and throwing it out the window because it was pure interest and it wasn't buying me anything. So now that we've learned that interest is not buying us anything, and it's actually leading us down the path of financial ruin, I want to quickly share a video with you, and then I'm going to come back and show you exactly how you can turn it around, how you can get your money working for you instead of working for somebody else or working for the bank.
And they've benefited from it.